For those of you that are sound money advocates, you're going to be quite pleased as to why silver shot up to almost $24 an ounce today. If you're a sound money advocate, can I get a heavens yes in the comment section below? Let's explore. Yeah, silver sometimes rises as an industrial metal or falls more likely. This is why the gold to silver ratio is really so high, because silver is seen much more as a commodity than it is a hedge. But today we're seeing it operate and move as a hedge against economic instability, with the gold to silver ratio now narrowing to below 83 for the first time in a little while here. Now, this is just 1 days of movements of price for silver, but let's talk a little bit about what's going on with the markets. As I record this video mere moments before the markets close down, gold and silver are up. Silver up dramatically more than gold. But let's put a little gold here, and so that you can take a look at that, because gold made a move today. Gold definitely went up a little bit, about $15 as I record this video, to $1,978.50. That's a 0.77% increase. Yes, indeed, quite a climb there for gold in 1 day. But silver went up 1.55%, over 1.5% today, climbing 37 cents, right around to $23.96 for the ask price. And it's a dime's worth of difference between the bid and ask price. But silver is definitely making a bigger move. And it's days like this that we like to see silver react, because that means if we see more of this type of activity and people start to see silver trade as a hedge and as sound money, well, that means indeed that we could see that ratio narrow significantly in time. But I'm not holding out much hope, if you want me to be honest with you. And that's what I try to do on this channel. I try to be honest with you about where I think the markets are going. The one thing that works against silver is the fact that over 70% of the metal is used in industry and in jewelry and other uses outside of being utilized as sound money or as commodity money and being traded as a hedge, kind of like gold is. So let's talk about this. I'm going to be referencing an article here from Kitco that talks about the reason why. There's really only one reason, and that is because it's the dollar strength is down today. And yesterday we saw the markets move, and it defied the dollar. But I knew it wouldn't last long, and it didn't last long. It fell. But right now, the dollar index, the dollar is still strong, but it has fallen 0.57%, down 0.59 points there to 103.56. But they're higher. And why? Because the markets are now factoring in that the U.S. Federal Reserve will not raise rates. This has been oscillating back and forth for quite a while. I'm looking at the Fed Watch tool right now, and the Fed Watch tool is now baking in and betting on that the Federal Reserve will pause for the first time in quite a long time, and that's going to weigh on the dollar strength, and it's going to also allow for gold and silver to pop out a bit here. If they indeed do pause at their next meeting coming soon, well, that means that gold and silver could potentially, start to move their way up. And these prices, by the way, are kind of, ignoring the fact that the Congress is going to pass this debt ceiling bill, and they're going to raise the debt ceiling. And by the way, that also means that they're going to be spending more money to the tune of $3.5 or $4 trillion in the next couple of years. It gives them more headroom. And it's a bad deal. Unfortunately, it looks like it's going to go through as I predicted. It's gone through the House. As I record this video, it's already passed the full House. But it's got to go through the Senate, and it will be signed by the president. And likely there's not going to be enough opposition in the Senate, unfortunately, but that's the way the cookie crumbles, as it were, and they're going to kick the can down the road, and that means that, likely the gold and silver prices will be dropping probably in due course, but that is if the Federal Reserve indeed does pause. The prices are climbing up a bit today. Now, I still think that they're going to raise rates. Yeah, believe it or not, I think they're going to raise rates, even though, as I look at the Fed Watch tool, 23.8% now think that the Federal Reserve will raise rates. That's a small minority compared to the 76.2% now that think they're going to pause. But I believe now the Federal Reserve, based off of the economic data that has come out the last couple of times, the chefs at the Cook the Books Club are doing their magic, and they are cooking the books, and that's something that I really did not like to admit that was happening. But I think nowadays, with everything so corruptible, from the FBI, the NSA, the CIA, there's a lot of the three-letter agencies that have become corrupted. Why not the BLS and other areas in government that are reporting on these matters? They very much are corrupted, and I think they're kind of shifting these numbers. And a lot of it is probably political, as well as preparing and giving themselves time to rein in and to try to, before this reset happens. And I believe there will be some sort of reset coming in due course. Notwithstanding, so that's where that holds. They're expecting. The Wall Street Journal reported that the Fed is likely to pause in its rate hike cycle at the June FOMC meeting before raising rates again later this summer. That's a shift from the consensus marketplace belief just recently that the Fed would again raise rates at the June FOMC meeting. But why pause now and then only to start again? Why not just go ahead and raise them again? It seems kind of crazy to think about, but, many people figured that the Federal Reserve was going to pivot. But all the economic data, at least that has come out, is moving towards the other way. We'll get into that in a moment. And this sizzling jobs report on Friday would throw cold water on the Fed pause, according to the Journal report. And likely that will sizzle because they're in there in the kitchen cooking the books. There was a very heavy U.S. economic data slate on Thursday. The data was a mixed bag, but the ADP National Employment Report for May did run hot, showing a raise of 278,000 jobs, well above market expectations, which is yet another reason why I think they are going to raise rates in the June meeting. Traders are now looking ahead at the Labor Department's employment situation report for May on Friday morning. The key non-farm payrolls number is seen coming in at 190,000 compared to the April non-farm jobs number of up 250,000. Asian and European stock markets were mostly higher, and U.S. stock indexes were higher as well too. And in fact, we look at the Dow Jones, it's up 153 points. The Nasdaq is up 165, and the S&P is up 41. So silver, indeed, looking at what the Fed is going to do, and it is reacting. But I still think this is going to be temporary. I still think that we're going to probably see through the summer downward pressure on silver and gold, but probably more so silver. I'm still of the mind that silver is going to fall below $21 an ounce sometime this summer before rising back up. And it's a long shot, but I'm going to stick with my prediction that I made earlier in the year, at the very beginning of the year, of $28 silver by the end of the year. I don't know. We'll find out and see where it goes. But nonetheless, I'm holding on either way. And buying opportunities, I think, are going to be here for us through the summer for silver. Gold, I don't think is going to move quite as radically. But again, today's movement of silver's price is of that of a hedge as opposed to as an industrial metal, which is a little bit surprising if you want me to be honest with you. Might as well be honest while I'm here. And I think that's a little bit of a shock to me today to see silver up. I mean, it's not a massive surge in silver's price. I think anything below 2% is noticeable for silver, but not really a surge in my own mind. I think anything above a 2% move within a day is a surge for silver's price. An explosion of price, I think, would be anything above 4%. Those are my criteria for it, or somewhere thereabouts. I want to give myself a little bit of wiggle room there for those, but we did see it shoot up to almost 24 today, and it is quite amazing to see. Now, the fundamentals remain strong, I think, for silver, and I think this should make those of us who are sound money advocates happy in terms of silver as a metal that does preserve your wealth in due course. Seeing it rise on a weaker dollar, I think, tells us that silver does still have the power to be a monetary metal, a metal that does preserve your wealth, a store of value, just as gold we know has. But silver has run into its doubts in recent years here, especially as we've seen the ratio between gold and silver rise so dramatically. And there's other indicators that you can use to measure that, and that are other commodity prices out there like nickel and copper. And right now, copper is actually down slightly per pound. So when you see that divergence between silver and copper prices, for a fact, and it is with the utmost confidence that you're seeing silver rule the day in terms of as a hedge. So that's something to celebrate days like this, even if it may be short-lived. And mark my words, I think it's going to be short-lived, silver's move today in this upwards direction. So do not lose heart. Hang tight. Silver is still what it has been for thousands of years. Nothing will change the attributes of what silver is as a store of value and as a hedge against inflation over the long course of time. And that's the best thing we can hope for silver, because it's not going to make you rich. It's going to keep you rich. That's what silver is about. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch this video. And while you're here, I want to encourage you to please rate this video. That means press the thumbs up button down below, share it with all of your friends, neighbors, and inanimate objects, comment, and subscribe.